Hello friends, we'll be understanding an illustration which will refer to the no separate book problem. So let's understand that with some illustrations. So when we understand that no separate books are being maintained, that means every co-venturer keeps a record of all the transactions that are done by him. So let's figure out what do we have in this illustration and what do we need to prepare. That means either the joint venture account in the books of the co-venturer or the co-venture's account in the books of other co-ventures as well. So let's figure that out. So we have the illustration written down here for your reference. Let's read out what exactly the illustration means. The parties to this joint venture are A and B. They enter into a joint venture together, and this specific joint venture was to underwrite the subscription of shares of Copper Mines Limited. Now this is a company, Copper Mines Limited, and A and B were the official underwriters. Now this company, Copper Mine Limited, had 1 lakh equity shares of rupees 10 each. So that means the capital was 1 lakh into 10, that gives you 10 lakh capital. And apart from that, the underwriting phase, they also had to pay all the expenses related to the allotment of these shares. Now, the profits were supposed to be shared in the ratio of 3/5 and 2/5. That means 3 upon 5 and 2 upon 5 was the ratio. Now, the consideration in return of this allotment was 12,000 shares. That means these expenses that were being handled for the allotment, in return to that or in favor of that expenses being taken over, they were supposed to be given 12,000 shares. and each share valued of rupees 10 each. So this was a fully paid up share that was being provided to them. Now A provided certain expenses that can be registration fees, which amounted to 12,000, advertisement expenses which amounted to 11,000, and printing of the prospectus, that means whatever company prospectus is there for issuing the shares, that printing cost for 7,500 was provided by A. There were other printing expenses that were also taken over by A, which amounted to 2,000. Now apart from this, B also took over certain expenses that were like payment of office rent, which amounted to 3,000, legal charges that amounted to 13,750, salary to clerical staff amounted to 9,000, and other petty disbursements of 1,750. So once these expenses were taken care of, the prospectus was issued. However, the applications fell short by 15,000 shares. That means a total of only 85,000 shares came in, rest 15,000 didn't come in at all. That means there was an undersubscription here. That's when the underwriters come into the picture. Now, whatever shares were falling short, or that means whatever amount of share, whatever quantity of shares being falling short, A took over all that thing and paid for the same in full. Now, the joint venture which was started, they received 12,000 shares as fully paid up in the consideration. That means once the subscription was taken over completely, they received all the 12,000 shares as they had discussed earlier. Now what they did is that they sold this entire share value, that means whatever 12,000 shares they had, they sold it at 12.5, out of which 50 paisa per share was taken off as brokerage. Whatever net proceeds they received out of that, they shared it between A and B, and how the ratio was has been mentioned here. For 15,000 shares it was taken over by A, and for B it was 12,000 shares. So the commission that they received was taken over by B. The proceeds that they received for 15,000 shares was taken over by A. Now we have to prepare joint venture and co-ventures account in the books of A and in the books of B as well. So let's start with the joint venture account first in the books of A. So now here there are no goods that are being supplied, hence we can directly hop on to the expenses that were being taken care of by each of these co-venturer. That means in the books of A, the joint venture account will have the expenses of both A and B. Similarly, in the books of B, the joint venture will have all the expenses of both A and B. However, in the books of A, when it comes to the co-venture account of B, they will have certain expenses related to that specific thing, and similarly for B it will be the same. So let's start with the expenses part, where joint venture expenses, or rather the joint venture, will be the similar thing, only difference will be in the terms of profit and loss being shared out. So let's figure out how much it is. Now the first entry that will be passing is related to the expenses paid by A. So that will be by bank account, or rather we can talk about to bank account is something that is being going out. So bank account is credited, joint venture account is debited, hence the entry here will be joint venture account debit to bank account, and on the debit side of the joint venture will be mentioning to bank and all the expenses related to that specific co-venture, or rather in the books of A it is for A itself. So all the expenses related to A has been mentioned down here. Registration, printing, prospectus, stationery, etc. has been mentioned here with the amount. Now the next entry that will be passing is for the expenses that are related to B. That means the entry will be the same, that is joint venture account debit, but here in terms of the amount that is being paid out, it is paid out by the co-venture. Hence, the co-venture account will be credited here. So joint venture to B is the entry that will be passed in the books of A, and on the debit side of joint venture account, it will be to B and all the expenses related to him. Now, the next item on the debit side will be the shares that were taken over by A. Here, this will be the amount that is fully paid up by A. That means 15,000 shares of rupees 10 each were taken over by A. Hence, the expense, or rather the entry, will be joint venture account to bank account. This will be related to the expenses of 15,000 shares which were undersubscribed. Now that on the debit side, we have already mentioned everything that is related to the expenses, let's mention on the credit side the income part. Now it has been mentioned that every share that A did hold, he sold it out for 12.50 per share, out of which 50 paise was taken out as the specific brokerage amount per share. So let's figure out how much is the calculation here. Now the entry will be bank account debit to joint venture account. So that means the total amount that he must have received is 12.5 per zero, or rather 12.5 per share. Out of that, 50 paisa is going for brokerage every share. That means 12 rupees per share he has received. So 15,000 into 12 will give you 1,80,000. So that is the amount of sale what A has made. Now let's figure out what is the amount of sale that B has made. That means again the entry will be B venture, or rather B's account debit to joint venture account credit. That means on the credit side of joint venture it will be by B account. So that means for B, it was 12,000 shares, again sold out at the same price, 12.50 less 50% brokerage on every share. That means 12,000 into 12 rupees, that gives you 1,44,000. That is the amount of sale that has happened for B. Let's record that. Now with this, we have mentioned all the expenses, all the incomes that are related to the joint venture. Now it's time to figure out whether there is profit or loss. So let's calculate the interim balance here. So the interim balance shows that the debit side is less as compared to the credit side. 2,10,000 is the balance of debit side, and the credit side total shows 3,24,000. That means there is a profit here. So let's record the profit. So the entry that we have mentioned on the debit side is to net profit. Under that category, P&L account, that means the share that is referred to A. Because in the books of A, when he records his own profit, he won't be mentioning his own name. He will be mentioning his profit and loss account with a share of his own. And the other share is going to be, so in his book, he'll mention the other co-venturer's name. So 3/5 and 2/5 is the share. So now that we have figured out the total balance that is supposed to be mentioned, that is 1,14,000 is the profit here in this. Now 1,14,000 has to be segregated in the ratio of 3:5 and 2:5. So let's figure out how much is for A, how much is for B. So for A, 3/5 of 1,14,000 is 68,400, and for B, 2/5 of 1,14,000 is 45,600. That means we have completed the total procedure that is related to the joint venture account in the books of A. Now in the books of A, we are supposed to record the other transaction. That means the co-venturer's account, that means B's account. So all the expenses, all the transactions that are related to B will be mentioned down here in his B account. So let's figure that out in the books of A. So now that we're preparing B's account in the books of A, let's record all the expenses here. Again, the expenses that were mentioned, that means joint venture account debit to B account. Again, the expenses that were mentioned here, that means joint venture account debit to B account. Now in the credit side of B's account, we'll be mentioning by joint venture account and all the expenses related to him. So this is the first transaction that we have mentioned here. Now the next transaction will be the sale proceed transaction. So if you remember, that was B's account debit to joint venture account that we have passed there in the joint venture account. So on the debit side of B account, we'll be mentioning to joint venture with the amount of sale here. So it is 1,44,000. Now the next phase is transferring the profit of B's. So when we say that there is a profit here, then what do we do? On the other side, when we mention that profit and loss account, that means the profit has been debited or credited. That means joint venture account debit to B's account. So on the credit side of B, will mention by joint venture and the profit of it. So here all the entries have been mentioned in the books of B now. Let's total it and figure out what is the balance on the credit side, that is the amount that he'll receive as a bank payment. So the amount that he has received is 70,900 by bank account. That means the entry that would have been passed here is bank account debit to B's account. On the credit side of B, they have mentioned by bank account. So that's the entry, that's the balancing figure basically. Now, whatever we have prepared right now in the books of A, the same thing is what we have to prepare in the books of B. So let's figure out the difference there. Now, in the books of B, we have to prepare the joint venture account. So let's start with the same thing. Again, the expenses that are related to B will be mentioned as by joint venture or the to bank account. However, with the expenses that are related to A will be mentioned by his co-venture's name itself, that is by A. So we'll first mention all the expenses that are paid off by B. So the entry has been mentioned to bank account and all the expenses that are related to B. Let's mention all the expenses that are related to A now. However, here the entry will be joint venture account debit to A, like the earlier one where we mentioned for B, that is joint venture to bank. So we have mentioned all the expenses that are related to A. To name them, registration fees, advertisement has been mentioned, printing of prospectus and printing of stationery has been mentioned, and the cost of shares that were taken over by A, rather the underwriting of 15,000 shares into 10 rupees each, has been also mentioned here. Now the next part will be on the credit side, will mention the sale proceeds. That means the sale done by B for 12,000 and the sale done by A for 15,000 shares. So the first item that we'll be mentioning on the credit side is the sale proceed of B, that is 1,44,000. And the second entry that we'll be mentioning there is the sale entry of A, that is by A's account itself. So now is the time to figure out the profit or loss here. Ideally, there is a profit that we already know because we have already prepared a joint venture in the books of A. So the same profit and loss has to be mentioned here. So if you can see, we have mentioned the net profit as well. A's share has been mentioned as A's account itself, and B's share has been mentioned as profit and loss account, accordingly with the amounts that were mentioned earlier in the joint venture in the books of A. Now, the last thing that we'll be preparing here is in the books of A, or rather in the books of B's, A's account or the co-ventures account will be mentioned here. Now in the books of B, we are preparing A's account. Again, the co-ventures accounts will mention all the expenses related to A and all the sale proceeds related to B along with the net profit related to A. So on the credit side, which is related to A, will mention all the expenses related to A here. So all the expenses that are done by A, that means registration fees, the prospectus, the printing, etc., will be mentioned on the credit side of his account, because the entry at that time would be joint venture account debit to A. So on the credit side of A account, it will be by joint venture and all the expenses done by him, including the cost of shares as well. So all the items related to A's expense has been mentioned here. Let's mention his profit now. So now that we have mentioned his profit, on the debits I'll be mentioning all the expenses, or rather we'll mention all the sale proceeds, and that will be the end of it, post which we'll be finding the balancing figure. So now that we've mentioned everything, let's figure out what is the credit total, and the balance will be mentioned, or rather the balancing figure will be mentioned on the debit side here. Now the total of the credit side is 2,50,900, out of which if we subtract 1,80,000, the rest will be the balancing figure, which will be mentioned as to bank. That is equivalent to the amount that is 70,900 itself, because A's account has been debited and the bank account has been credited. That means that much of partition has gone to B, hence it has been mentioned here, rather it has gone to joint venture itself, hence it has been mentioned here as a part of this transaction. So this is the balance figure that we have figured out. So with this, we have completed the illustration and we understand how to pass the journal entries when it comes to the transactions related to no separate set of books being maintained here. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.